So hedge funds, somewhat recent estimates say that there's about 15,000 hedge funds globally, and with $4.5 trillion in assets under management. So you may have, opinions on hedge funds and think they're like black box or short-term traders or, greedy investors. But I don't think we can generalize that to everybody in every strategy, or we don't think so. And that's $4.5 trillion that have the potential to have a positive impact and help companies that are providing positive solutions scale. So what we think is, so hedge funds, why we think that they make an interesting, or can be potentially effective is they have their investment vehicles with unconstrained mandates. And so they have a flexible mandate. So they're not benchmark or index constrained. They can kind of go where the opportunity leads them to. They can trade with lots of different types of investments, so futures, equities, credit, macro. And the ones that we're really focused on and that we think can be most impactful in the space is more fundamental, long-term, typically long-term focused managers. And the toolkit is active management, which I mentioned, right? They can go where the alpha opportunities are, and they can really employ these tools and ESG integration tools to really look at the nuances of companies and look at all these, also material, non-financial focused factors such as environmental and social factors. And then they also can engagement activism is another tool, and also short selling. And this can all help, incorporate the nuances of ESG integration and be impactful. And then for private credit, you're making loans directly to companies as they scale their businesses. And it's often at critical times in their life cycle, or giving lawyers financing to help them, fight for individual victims who don't have the means to fight for themselves. And especially with, Silicon Valley Bank going under and them not having access to other financing opportunities, we kind of come in at this critical stage. And then private credit managers themselves really excel at underwriting and identifying and mitigating risks while engaging directly with borrowers. So that's the structure of the space. And then when we look at the landscape of sustainability, like very few people implement their impact goals through hedge funds or private credit managers, right? The majority of people do, implement their impact goals on the private side, mainly through venture capital or private equity. And then a lot of people aren't as, happy on the long only side, which has more passive strategies, not completely. So we think there's this white space and this untapped opportunity within the more liquid alternatives, hedge fund and private credit space that can really help. And so we think, venture capital and private equity, they're important sources of capital for startups and early stage firms. But as we think about the life cycles of companies, these portfolio companies evolve, and many will turn to the public markets or private credit. And so while the previous regime of low interest rates delayed a lot of this maturation, we face a really different monetary environment now. And so I think the public markets can help support these innovative companies as they grow and mature, and also help support public companies as they're transitioning. And so, there's the scale of impact can really expand in the public markets. And also, like if you think about a public market company, if they move on sustainability, there's huge ripple effects throughout their own supply chain that can really impact additional companies. So I think it should just be part of the overall solution, and not be as underrepresented as it is. And then I think what Corbin is doing, which is really interesting, is they're then, taking their expertise in terms of identifying hedge fund and private credit investments and managers, and they're applying it with a sustainability lens. And so they're seeing these real emerging investment opportunities due to the megatrends, and that, we can really focus on investments and partners that have real intentional outcomes with their strategies, which I think is really exciting.